All right. What's going on, guys? Can you hear me all right? All right. So, thank you all for joining, for watching this video. The reason why I do these live trading reviews is because trading options is a lot like riding your bike. It doesn't matter how many videos you watch on riding a bike, putting a foot on a pedal, pedaling, keeping your balance. At the end of the day, you need to get on that bike in order to truly know how to ride a bike. And it's the same thing with options. It doesn't matter how many videos you watch, how many videos you memorize. There's a lot of great tutorials on YouTube, but ultimately you have to start trading, whether it's with 500 bucks to just do one successful wheel strategy or just one cash secured put. Whatever it is that you want to try, you have to eventually start doing it. And so that is the purpose of these live trading sessions, is to kind of go through the thought process and hold your hand through trading. I started with about 130, 120K, getting up to 200 now in 6 months. My strategy is very, very safe. I aim for maybe 0.5% a week, maybe sometimes less. I don't chase premium. I chase safety. I like to be comfortable with my trades. If that means I make 1% a week or 0.0001 a week, it doesn't matter to me. That is kind of my trading strategy. And I couple that with whether it's a little bit of fundamental, a little bit of technical. It's a mix of how I get to these conclusions. And I'm happy to share that with you. And that's what we're going to do today. So, what I'm going to do today is two things, or rather three things. Number one is we're going to go through the Excel sheet, which is kind of my main where I calculate, where I keep track of every single trade. It's probably the most important thing for you as an option trader, is keeping track of your trades. And the reason for that is because it allows you to concentrate and really hone in on what your percent gain is. You know, how much money are you making on your money invested? What is your return on investment? That metric is most important because it doesn't matter if you're trading with $1,000 or you're trading with $5 million. If you're making 2% per trade, then that 2% doesn't matter the quantity. It's 2%, and the percent gains is really what makes you a good trader, right? It doesn't matter if you make $100,000 in a trade, but if that trade required $100 million of collateral, then it's really not a great trade. But if you made $1,000 on a trade that required 5,000 of collateral and you felt safe with that trade, then that's a phenomenal trade. So that's why the percent is the most important part. And with this Excel sheet, I track that. The second reason why the Excel sheet is the most important thing is because when you're rolling and you're quantifying, or you're rolling over your premium, you have to keep track of the premium that you've already earned, especially if you roll for a credit. So every time you roll, if you make income, if you make premium, you have to keep track of it, because then to that allows you to keep in mind what your break even point is. And maybe it allows you to get out of trades earlier if you want to, or cut a trade early, not at a loss, but maybe at a break even. So very important thing to do. All right, so let me put the Excel sheet right here on the screen. Okay, give me 1 second there, guys. All right, guys, so I'm going to go ahead and put the Excel sheet right here on the screen so that way we can go through it. All right, let me know if, let me see if I can see it here. Share screen. Let's go to entire screen. Okay. All right, so this is what we have here, right? This right here, this is the main part of the tracker. This just shows how much money I've put in. Let me zoom in here a little bit so you guys can see it better. This just shows how much money I've put in. Deposits, withdrawals, what my year-to-date deposit is. So I put in 144,580, and ultimately what the balance is of the account. So now let's go to balances of the account. So now down here on the tabs, I've itemized it by the individual stock based on the ones that I trade daily, right? So there's two schools of thoughts when it comes to trading options, right? And different YouTube channels do different things. There's some YouTube channels that will dip around in different stocks and share and sell cash secured puts on very different array of stocks. And that is one way to do it. I personally used to do it that way. But ever since I started watching TJ The Real Deal, right? Phenomenal account. I highly recommend that you go and see him. And his whole shift was, look, you got to pick a horse and you got to ride that horse for a period of time until the thesis on the stock changes. And it made a lot more sense because when you track a stock that closely, you're more familiar with the way that it responds to certain things in the economy. You know how it responds to Fed rate hikes. You know how it responds to earnings. You know how it responds to market opens. You know how volatile it is. And so it allows you to mark your trades a little bit better and be more efficient. And not just that, but it allows you to really take advantage of the wheel strategy and ride the stock. So the bottom tickers are kind of my main horses, if you will. I've got Tesla, Sophie, and Palantir. And then on this put sold tracker, it's really just one-off trades that I do. So you can hear I've got Snow, Nvidia, American Airlines. This is a trade that we'll talk about, Melly. This is definitely not something I recommend for my channel. Amazon. So we'll go through these, right, as we open up the portfolio. But the main thing I want to show you here is the following, right? So if I'm rolling a trade regardless of date, I'll keep it in the same kind of section. So that way it's easy for me to track what's going on with it, right? Because normally this is categorized by date. So what we can see here is American Airlines. This is the ticker. This then tells me when I opened it. This tells me what type of trade it was. This tells me the expiration of the trade. This tells me at what strike I sold it at. This tells me the amount of contracts. This tells me the premium that I got per contract. So since I did 2 contracts, 25 times 2 is 50. This tells me here if the trade is open or closed, so I can see which ones are my trades that are open. Here it tells me the date that this is the first part of the transaction. This part right here is when I close the trade, right? So I closed it on 7/12, so I did wait till expiration. Closing cost, I closed it for $33 per contract. So remember, I got 25 and I closed it for 33. So this was definitely at a loss. I got a total debit of 66 and I got 50. But remember, because I sold it at 66, it's not that I lost 66. I got 50 for it originally, and then I sold it and then I had to close it at 66. So in reality, and this is what I mean by tracking the premium, right? Or your loss. So in reality, I lost $16. Okay. So I rolled it, opened it again, 2 contracts. And by the way, these I kept at the same strike price. Normally I try to roll it down, but I really do sincerely think American Airlines is going to recover. So there's no point in me giving up that premium and rolling down. So I'm just maintaining the strike at 11. Got $41.82. Had to close it again for a slight loss. You see how it's at 41.45. So I lost $8 on this one. And again, percentages. Don't focus on dollars, focus on percentages. So small losses, maybe less than 1%. Rolled it again, third time rolling it, $68. Had to close it out. So this one I closed out for $45, but I rolled it. You see how here it says rolled X? So I did roll it, but I rolled it at a profit because it was not so much out of the money. This was still out of the money, but not so much out of the money. Otherwise, it would have expired at zero since it's the date closed with 7/26, which is the expiration date. So let's say I did a strike of 11. This was probably trading at like 10.70, 10.80, something like that. So I closed it for a $46 profit. So technically right now we're at a $22 profit. So I'm already profitable on this trade from rolling. And so I went ahead and rolled it to $65. I closed it for 45s and I opened it for 65s, right? So the question here is, well, what is my break even, right? So here's your break even. You're down 16, you're down 8. So my break even is at this point $22. So that means the moment the contract gets to $22 from this 65, I can go ahead and close it at 22 if I want to. If I go here and close it at 22, that should be my break even point right there. Or rather, I'm sorry, hold on. This trade, backtrack that. This trade is already profitable. You see here, 16 minus 8 plus 46, it's already profitable, $22. So this is all gravy here. But let's pretend this part wasn't there yet, this 46, right? I'm at a loss of $24. That means that I would have had to close this at 24, at less than 24. So I would have had to make 24, right? So that means that I would have closed it at 44. If I would have closed this at 44, 44 would have been my profitable trade. Right? So let's see here. 24, 24, 24, 24. Oh, 44. So, all right. So you see here from my two previous rolls down here, my loss is $24. So that means that I need to make $24 or $12 per contract, because it's two contracts, to break even, right? So that means that out of this 68, I need to make $12 to break even. So I know that the moment that option reaches $56, right, I am officially broke even. And if you check this by doing this, your sum is zero, right? So now I know internally that when I'm monitoring that trade, the moment it gets to 56, it's all gravy from there, right? And this is important because as you keep rolling and rolling and rolling, as you keep rolling and rolling and rolling, you want to make sure that you stay profitable, right? So let's look at this one more example. Let's look at Snow. Snow is a great one to sell premium on, very volatile. Don't recommend it, but let's take a look, right? So I opened 3 contracts, 137 strike for $70. Did not do so well. I had to close them for $272 each. That's an $800 debit. So I lost $600 on that trade. Now I had 2 options, which is 1.5% loss. Not crazy. So I had 2 options. I could either close that, move on, or I could roll it. So what did I do? I rolled it. I rolled it down and out, right? So here from 137, I rolled it to 136. Rolled it $1 down, which makes it easier for it to get out of the money. I sold it for a premium of 382, which is a total of 1,146, right? So that means that my profit now is 540 if it expires at zero, but it didn't. It was also in the money by the time it expired. So I closed it for 587, so closed it for even more of a loss, which is a total of 1761, which is another $615. So currently on this trade, I'm down $1,221, right? So I said, you know what, I'm going to keep rolling it down. So I rolled it another down, 135. I got $617 a premium. That's $1,851. And when I closed it, it was somewhat recovering to 135. So it was a wash. I had to close it at pretty much the same amount of money that, I opened it for. So that's a $3 loss. So currently I'm down $1,224 on this trade. So what does that mean? That means that currently and we'll check this out live on Robinhood because we're going to be done with this Excel sheet right after this. So what does that mean? That means I currently have this trade open, right? Which I got $858 premiums for. Rolled it down to 134. It expires August 16th. So what I need to keep an eye on is, okay, what is my break-even point? My break-even is I'm down $1,224 in the hole on premium, right? So 1,124 divided by 3, because I've got 3 contracts, that means that's 408. So I need to make 408 on this contract for me to be profitable. So if I got 858 and we said I need 408, that means at the moment this option reaches $450, I can close it and literally break even with this trade and move on, right? So now let's go over to that particular trade and see what's going on with it. Market opens in about 5 minutes, and we're going to see exactly what's going on. But let's go see what the pre kind of action is on it. I like to keep these videos, by the way, to 30 minutes. We're already reaching minute, I don't know what minute we're on, but so if I go to the option we were just looking at, which we said 450 was going to be my break-even point, right? Right now it's at 875. So I'm actually already losing money on this also, but I'm not worried. 134. Truthfully, here's the conclusion with this. I think Snowflake is very extremely oversold. I think it's gotten a pretty decent support at 120, 124. It's formed a support down here. So I'm not concerned that it'll go lower. And what I do intend to do is that whenever we get one of these spikes like this or like this is when I'm going to cut out the trade and move on. So currently I think it's pre-market. It's up to 130. I don't mind keep rolling it. So I'll keep rolling it to right now. I think we're down to 134. I started at 137. So I'll keep rolling it down. I'm not really concerned about this trade. Not that I trust these ratings too much, but 70% buy rating. It's got a 187 of fair value. They just announced a pretty interesting partnership with OpenAI. So they're definitely still in the party. They just had a new CEO come in, so they're just kind of getting their feet reprogrammed, if you will. All right, so let's go ahead and go through the trades before market opens. So that way, when the market opens, we can just go ahead and make some trades. Now, I normally trade weeklies or monthlies. But here's the thing. I'm going on a trip. I'm going to Africa. Going to Africa tomorrow for about a week and a half. And I don't want to be worried about any trades. So I'm rolling these out 2 weeks out till August 16th. So that's why you'll see a few trades are already out until 8/16. What I want to do today is there's a few options that are expiring on Friday. So I want to make sure that I roll those out, even though they still have about a week left. I roll those out till the 16th. I'm going to be summiting Mount Kilimanjaro, so I won't have access to the internet, and I don't want to be worrying about my trades. So that's pretty much the reason. Now, let's go through these trades quickly, and then I'll open the floor up to a Q&A. Palantir right now, here's what I did on Palantir. I'm doing the wheel on one contract. That's it. So what did I do? I went into Palantir. I bought 100 shares a couple of weeks ago. I bought them at 27.84, bought 100 shares. This is the type of exercise that I really encourage people that are just starting off to do. Just buy 100 shares of a stock that you like and just go through the wheel process and track it. Get used to tracking it, right? So if we go to my Excel sheet, I go to Palantir. It's still very early in Palantir. But what am I doing? I bought here, I track the trades, my shares that I bought. So 27.84, I spent 2,784. My cost per share right now is 227.84. Here, what it tells me is it takes all the profits from my option selling, and it gives me what my net basis is on the shares, right? So right now it shows negative 39, and I'll tell you why. So how did I start off? First, I was selling puts on Palantir back when it was at 22, 23. Made some money there, made 15 bucks, made, $11, which look, this is 0.5% in a week. So it looks small, but that's why I tell you to focus on the percentage, because when you scale this amount, it becomes very interesting. Here's where I started kind of my wheel strategy. So I bought the shares, which you can choose to either just buy them or do a cash secured put. I sold a covered call on them at the 28.50 for $61. Palantir went through the roof. I think it was trading at like $29, and I didn't want to lose the shares. I could have easily made a profit on the shares, right? If I bought them at 27.84, right? 27.84, and I made the $61 profit and $65 profit, and I made the difference between the strike that I sold it at and what I bought it at. Right, we'll add the 64 at the end, because right now I'm just trying to get to. So we've got 28.50. So I would have made, so this is 28.50. Let me see something here. So I would have made 66 cents, right, on the share appreciation from when I bought them to the strike. So I would have made 66 cents times 100 is $66, plus the premium that I collected for selling that option, 61. So I would have made $127. So I would have made $127 on my initial investment of, we said it was 2,784. Times 100. So look, in 1 week, that would have been a 4.56% trade. Okay, so in 1 week, I would have made 4.5%. To put that into perspective, short-term treasuries right now, which is considered the safest investment, is yielding about 5.5%. So you're making what you would make in that full year in this amount. Obviously, this is a completely different trade than treasuries, but just to give you a comparison on returns. But I decided, you know what? I want to keep my shares. I don't want to give them up. I think Palantir's rise up was a bit unexpected. I think they're going to cool down a bit. So I decided to roll it out. So I said, you know what? I'm going to buy them back for 120. So I took a double loss. I was down $58. Okay. And let me see how we calculate this here. Let me see. So 50 times 100. Oh, so here it just calculates what your loss is on your total amount, right? Not on the individual option, but on the total amount. So it is a small loss, if you will. And I rolled it up. I rolled it up from 28.50 to 29. I picked up $150. And more than likely, either I'm going to let them go at 29, which I'd be fine with because I keep the 150 plus the difference from 27.84 to 29. More than likely, they won't get to 29. If I'm not mistaken, it's already at 20. Yeah, it's already at 27.42. So it spiked up to right here, spiked up to 29, came back all the way down. Six days left on earnings. So you see, this is interesting because we have earnings on August 5th, right? But this 29 expires August 2nd. So two things are going to happen. I usually don't like to trade earnings, but two things are going to happen. Either this is just going to go through the roof, and look, market's open already, and look where it's going. So this is either going to go through the roof or it's going to tank. Palantir is a long-term hold for me. We can get into why later. So what I'm going to do is I'm actually not even going to touch this. I'm going to let this trade expire on the 2nd of August. I'm going to leave it naked for that week until earnings. And I'm not going to have a position on it because I don't want to lose on the upside. And quite frankly, the downside is relevant to me. So this trade, look, we're already up 85%. I could close this trade today and still be good with it. You know, I also won't close it early because there's still $22 left just for holding it. And the reason why I want to leave it open is because if it does go all the way to 29 before earnings, I'm happy taking that $29, which is a phenomenal return. It's going to be like a 10% return. And then just waiting for it to either correct in the future or when it be, or maybe I just don't open up a position and move on. But it does seem very attractive to close it out early. You know what? I may do that. Just because I only have one contract, it doesn't really matter to me. Let's go ahead and close this. Let's see if we can get a $24 close here. All right, so it filled at $24. So what do? We go here to this covered call. We say, look, we closed it on the 29th. We paid $24 for this. And that is one contract. So we made 126, which means that we really made a profit of $68, right? Which is fine. That's okay. I'm okay with that. As long as we're green. As long as we made money, I'm okay with it. So what are we going to do now? Well, we really are just, and then this sold put. Okay, so I sold the put for 27, which I may also close out early. And look, truthfully, this may ride up until earnings, at which point I'll probably sell a call out the money. Very out the money. So I'll sell like a 33, 34, something like that. I did sell a $27 put. I'm not a fan of having puts during earnings, just because if it goes to shit, you're stuck at that. Earnings is just a very difficult time to trade, especially now when the economy's cooling off and a lot of earnings could be hit or miss. I do, however, think that Palantir is positioned best for the future. So we'll keep an eye on that trade. Glad we closed out the other one. This one, we just got brand new premium for this. What did we close? We closed this for a loss, so we rolled this down $7. So that means that as long as my premium stays, as long as I can close this out for 175, then I'm green. 175. It's at 166. So I technically could close this now for a profit. But you know what? Let's let it run. I'm not really concerned about it. truthfully, at my cost basis was 27.81, so buying them at 27 is not necessarily bad. But Palantir is just such a volatile stock that I may not even want to. I may just want to close it. I'm gonna be quite honest with you guys. Not a fan of holding things through earnings. All right, let's leave this at 155. See if it fills during our time here. All right, so let's keep going. This one's going to be a little bit longer just because I'm leaving for 2 weeks, so I really want to go through all these positions. Look, this is truthfully why I like to kind of trade in the mornings. You see a spike, good time to sell calls, good time to be active. Just my personal preference. Let's see what's happening with SoFi. I think SoFi has earnings today as well. SoFi is my other main account. So SoFi has earnings on. Oh, right now. Oh, sorry, tomorrow. So tomorrow pre-market, it has earnings. Look, I think. What do I think about SoFi? Truthfully, I think SoFi's UI, their front facing, is not that great. I've tried the app. Their marketing is phenomenal. I don't know if they offer anything unique, to be quite frank, but I think what's interesting about this company is the fact that they have a bank charter. Because most of these tech kind of, tech bank companies, they usually are just a front-facing interface for banks. But the fact that, or I'm sorry, front-facing interface that don't have banks, but the fact that they do have a bank, I think gives them a unique ability uh, to just be more vertically integrated. Now, I've been trading this stock for a little bit now. I've been making a lot of money. This stock, from what I've seen, it doesn't keep gains a lot. I think it will right after rate hikes are officially announced, but who knows when that be? That could be September. It could be next year. So I've taken the position to just trade puts on it, right? So we have a couple open trades here. I rolled out my 6.5 calls just to get as much. Right now it's very volatile, so I wanted to bank that premium. I don't care about letting them go at 650. To be quite frank, I'm okay with that. I sold $7 calls for Friday. Right now it's at 740 with earnings. Honestly, with earnings, this thing could go back down to 650, $7. I wouldn't be surprised if they don't show the significant growth that they need to show. So we really need to have all eyes on what their user base growth is, and then that'll tell us a lot about it. But I feel comfortable just holding on to these $7 puts. These are also ones that I may cut out early. I just don't want that exposure, to be quite frank. But what are we at right now? We're down $16, 16%. We're down $48 on these. 11 contracts. It's not that many contracts. 8-2. The reason I did these is just because I like to take 2 positions on trades. So you see, I've got my $7 calls and my $7 puts expiring on the same day. So one of these will be right? And that's what I like. Now, one of these I will make 100% profit on. Whether it's I keep my shares, if it stays under 7, I keep my shares, but I'm gonna have to roll out my puts. But if it's above 7, I can lose my shares, or I roll out my shares, but I make 100% of this put. And I've got that equal exposure. So I like this trade. So I may leave these 2 just until earnings tomorrow, and then I'll make that decision. American Airlines. I already rolled these out, but let's see what's going on with them. Sometimes I double down on certain plays. This is down. They had earnings. They did very good with earnings. I suspect their next earnings will be good as well because it'll be summer earnings, which is great. So that's why I'm holding tight to these $11 puts. What I may do is just add to them, even though right now I'm up on them, so I'm not necessarily inclined to do it. But maybe what I'll do is I'll open up, just to make it 5. I've got 2 here. I'm going to open up 3 at, let's do, let's do 3. There we go. We got filled 63. So we did 3 at 63. So we go over here to our American Airlines, right? And again, I only keep them underneath it if it's rolling the stock. Otherwise, I just keep adding it to the bottom if it's a new trade. So we just made this trade today on the 29th. Put sold, expires on... Actually, you know what? Even though it's not a roll, it's the same type of trade. We're just adding to that position. Now, the reason why I don't just increase it on here is because sometimes when I'm closing positions, you know, if I got more premium on one batch of the trade versus the other one, it allows me to close it even earlier. So that's why I don't like to blend batches. But so this one we just sold on 7/29, 8/16, 11 threes for, what is it? We got $63 for these. We got $189 in premium. So right now we're at $319 in premium. What does this thing keep saying? Privacy. This document contains macros. All right, so we opened that. What else are we looking at here? So this Amazon trade is just, I think I went through it. This one we're just letting it ride. It's really just, I bought a call. I think Amazon was extremely underpriced because Bezos was just selling a bunch of it. So I bought a call option and then I sold a call on it too. What I may do is just sell the call on it, to be honest, and then just close it out for a profit if I can. So look, I bought the 30. This is basically a poor man coverage call. That's all this is. So basically I'm controlling 100 shares of this option. I paid $5.90, so I'm really down $30 on it, right? But I sold a $38 call for $156 that I've made already 48. So technically I'm up like $12, $13 on this trade. Nothing crazy, but I'm up on it. This trade will really start to print once this starts getting up to 35, 36, and this expires on 8/16, and then this starts to expire. The premium will be eaten up way quicker. So this is just a trade that I'm just letting it ride. It was just an example of what you can do. That's more of an advanced strategy. CLSK. So this one is one that I just wanted to join the party on. CleanSpark is, I believe, part of Bitcoin miners, if I'm not mistaken. They're a technology company, management of data centers, very, very, very volatile. So I like it because premiums are good. And so I jumped in the party. What are we at? So right now it's taking a little bit of a dump. It's still up 0.5%. I sold 3 puts at 1750 for 8/16, right? So this one, I think we're just letting it ride. Requires of 1750 collateral. It's not bad. Let's see if we're above or below our premium. We got 206. So right now we're up on it, 199. So we're doing okay with it. Just keep tracking it. This looks like it's going back up. Very volatile stock. I mean, look, it opened up at 1788. So I could have easily closed this at a larger profit in the morning. But we're going to let this ride because it's still we've got till 8/16. So this is something I'm going to take a look at after my trip. This is the one I was telling you about that is not really for you guys because this is more of these are the trades that I don't like to take. High risk. Basically, Meli is the Amazon of Latin America. Okay. They're the Amazon of Latin America, and they're a huge company, 60,000 employees, 91% rating buy. I mean, they're on full growth mode, right? And it seems like there's a lot of talk on the street that for their earnings, which are August 1st, so that will be in like 2 days, they're going to do a stock split. And if that's the case, this thing's going to run. So I decided to buy one call option expiring on the 16th. I spent a lot of money on this call option, a lot of money. And right now, we're going to see what happens. But I spent $10,600 on one call option. Okay. Now, right now it's worth 6,530. But what I've been doing to bring my cost basis down is, since I know that the trigger is usually going to be at earnings, the stock is probably not going to do much since I bought it. I think I bought it like 2 weeks ago. And it really hasn't. It's stayed pretty within range. So I sold calls against it to try to bring in some income and bring down my cost basis. So here you can see I paid $10,600. I'm down 10,600. But I made 670, 85, 800, and 155 by selling calls on them. So I bought the 1,680 call, and I would sell the 1,780, 1,705, 1,700, 1,665. I would just sell calls on it, and I collected an average of about $1,700 of premium from this. So in reality, my cost basis on this stock or on that option is 8,890. Okay, just keep that in mind. So here's what's going to happen. When they announce earnings, it's either going to go up or down. I mean, that's really the basics of it. But I think Latin America is going through its own renaissance. I just want to say a word out to the Venezuelan people right now, going through pretty much a civil war, with their elections. I hope that comes out fruitful for them. But you can see the tide turning in Latin America to capitalistic, less socialistic governments. You saw it with Argentina. You saw it with El Salvador. So we'll see what happens. All right, Palantir. We went through that snow. My lovely Tesla position. Where are we right now? So Tesla's doing phenomenal again. I don't know. I've covered this extensively on my X channel, but pretty much I got caught underwater selling calls. So I've got $205 calls expiring in December. So I may truthfully, I don't want to get rid of these shares. So I'm just going to keep rolling these shares and keep rolling them and rolling them and rolling them until I die. I sold a $200 call, and then I have a 205, a $200 call, and then these two right here is I bought a $175 call that I'm going to exercise very soon. So I need to start generating or freeing up money to buy this. So it's going to require $7,500 of capital, and then that'll allow me to roll this 195 further out too, because right now it only lets me roll it out to 816 because it's using this call option as my collateral. So we'll take a look at that later. Now, this 170, 160 credit spread trade, I think, is a phenomenal trade. So it's a high risk trade. I mean, look, we're up on it $200 already. This was open 724. I think this may be something that if we see Tesla come back down, I may open up even more positions of. I feel comfortable having this trade open until the robo-taxi event. I think after the robo-taxi event, Tesla's going to either go up a lot or go down a lot. So I don't want to have this trade open. But pretty much I'm safe as long as it stays above 170. And we'll do another video on credit spreads, but it's just something to keep in mind. We're doing very good on Tesla. Average cost 172, 900 shares. So, we're going to be just keeping an eye on Tesla. And I believe that covers it all, man. That covers everything, guys. Thank you very much. I'm going to open up the floor to anybody that's, let me go ahead and cancel screen here. Anybody that has any questions, feel free to put them in the chat. And happy to answer anything, any scenarios you guys are going through. Thank you for watching. And I will see you guys after my trip. Have a good one.